Lawmakers are considering a bill that would let Hoosiers borrow more when they take out a payday loan with higher interest rates and more fees. WRTV State House reporter Meredith Hackler tells us why some are concerned the legislation could plunge people further into debt.
When you're in a bind and need a bill paid, getting a payday loan can seem like the only solution. But right now, there is a limit on how much you can borrow from a payday lender. But a bill would let institutions participate in what's called supervised loans.
There's really no product in Indiana that's regulated in the middle for subprime borrowers.
State Representative Jake Tushka is the author of a bill that would let non-depository lenders offer loans up to $25,000. A non-depository lender is a lender that doesn't offer checking or savings accounts. The bill would also increase the maximum interest rate for loans in general to 36%. The current max is 25%.
At 25%, there are certain borrowers that these companies cannot underwrite. Certain loans that go unmade.
Under the bill, the lender could also charge monthly service fees on top of the interest rate borrowers are already being charged.
Didn't really look at the bottom line or the fine details. That's on me, but I had to kind of dig myself out of that situation and ask my folks to help me out. I think I was 20 years old at the time.
Bryce Gustafson took a payday loan out once when he was in a bind. He says allowing payday loan lenders to loan out more money and add service fees could put even more of a strain on lower income Hoosiers.
If traditional banks aren't going to provide them the ability to get loans, they're almost forced to do this.
The Indiana Community Action Poverty Institute agrees.
This idea that it's therefore helpful to make really expensive loans to struggling people, I think that doesn't make any sense at all.
But Rep. Tushka says there's no other option currently on the table to help borrowers with bad credit and low income.
Would love for there to be another solution, right? But currently, there just isn't one. And again, there is this huge gap in the marketplace.
In Indianapolis, Meredith Hackler, WRTV.
Under this proposal, service fees on loans every month could be up to 8%. Rep. Tushka says they are considering other amendments on the bill. The legislation is currently waiting on a committee vote.